Good morning. You are watching a live daily market outlook for Thursday, 19th of April 2012, prepared by Windsor Brokers. All eyes today are on the Spanish auction, which is going to be the main event for today. And markets are in rather quiet mode, awaiting the result of the auction of Spanish benchmark 10-year bond. The Spain today will pay dearly for a longer-term debt on when it auctions a 10-year bond for only the second time this year to markets spooked by fears it will miss deficit targets and fail to restart growth. As said, the benchmark 10-year bond peaked above 6% on Monday for the first time since the end of November, and this sparks concern it could soon become unsustainable for the government to refinance itself, though pressure on the paper has since eased. Yesterday's announcement from the Spanish Prime Minister saying that Spain is not in need for any bailout so far is quite indicative at this point, as the similar scenario happened in Greece initially. Before this we had in Ireland, and then Greece and Italy. So most likely we'll see today what will be the outcome of the auction, but most likely will be that the Spain will need some boost from European Central Bank and the EFSF fund. The Treasury aims to raise up to 2.5 billion euros between the auction of a bond maturing October 31st, 2014, 3.3% coupon, and the benchmark which comes due January 31st, 2022, and holds 5.85% coupon. The relatively small auction and the fact that the Treasury has already raised 47% of its gross issuance target for this year after taking advantage of two European Central Bank credit lines means demand is likely to be high. However, after Spanish borrowing costs jumped at the bond auction on April 4th and the T-bill auction last Tuesday, yields on today will also climb as sentiment wavers. The Spanish auction is due at 8:30 GMT today. From the other markets, as mentioned at the beginning, rather quiet movements during the overnight session, with the euro being stuck within 30 pips spread, holding just above 131 mark, while sterling is holding a positive tone of past couple of days and currently is attempting through the key barrier and the yearly high at 160.61. The dollar yen is still in the near-term recovery mode of 80.28 low. 81.50, our second target, has so far been tested with the price currently stuck at these levels. Dollar Swiss is still more turned towards the downside after unsuccessful attempts above previous high at 92.21, once at 92.50, that was followed by sharp reversal, and 92.08 yesterday's upside rejection. Gold had registered the significant losses yesterday and overnight, dipping further down, and the most important was the brief break below the main trend line support at 1636 as the yellow metal price dipped to 1640. That's the yellow metal price that dipped to 1636 so far. The crude oil is back to the 102 zone after a strong rally in past 2 days, peaked at 105 level, dipping overnight yesterday, to 102.18. Important about oil is that Japan will announce that they will slash its crude purchases from Iran by almost 80% in April, compared to the first 2 months of the year, as buyers comply with the Western sanctions. The cut amounting to 250,000 barrels per day are the steepest yet by the four Asian nations who buy most of Iran's 2.2 million barrels per day of exports, as tightening sanctions make it tough to pay, ship and insure the oil. From today's calendar, except the Spanish auction that I said is due at 8:30 GMT, the other important releases are coming first from the States. 12:30 GMTs are U.S. Weekly jobless claims. Today's forecast compared to the last week's unexpected jump to 380,000 is slightly lower. 370,000 new jobless claims are expected to be filled for the past week. Eurozone's consumer confidence that is expected to stay unchanged at -19 is due at 1400 GMT. At the same time, U.S. existing home sales for March are expected to show a slight improvement from the previous month release at 4.59 million units to 4.62 million units. Philadelphia Fed Manufacturing Index at the same time for April 12.1 is today's forecast compared to 12.5 of the previous month release, and the final from US at the same time 1400 GMT leading index month release for March decrease to 0.2% compared to 0.7% of the previous month. Quick look at the markets to see the latest movements of the major currencies and commodities. As always, starting with euro. As we can see, basically the pair is in the short term entrenched within the 130 and the 132 range, holding in the sideways mode in past couple of days. Upside rejection at 132.11 on 12th of April, and subsequent sharp dip down that briefly dented the beginning of the upper part of the very strong support at 130.00 and 129.50. As you can see on the daily chart, was so far contained at 129.93, the low posted on 16th of April, but not much seen on the strong bounce higher as the price mainly moves around the 131 zone. There was exception in yesterday's sharp dip down to 130.56, but a quick recovery brought the pair's price back to 131 zone, holding slightly above these levels. Immediate barrier is at 131.71, Tuesday's high, ahead of a more significant 132.11 zone, where we have the previous high of 12th of April, main bear trend line drawn of 142.46 high of 27th of October 2011, and the 55 days moving average. The holding below this zone keeps the downside still vulnerable, as the pair's action most of the time was limited by the main bear trend line, with the brief excursion seen at the end of March, beginning of April, when the price jumped to 133.80, but this was short-lived. The main risk still remains towards the downside, as studies on the daily chart are still below their midlines, still pointing lower, and as long as the strong barrier at 132 zone keeps the upside limited, there is a risk of possible revisiting of recent low at 129.93 and the upper part of the strong support zone at defined by 130.00, 129.73 on the downside, 129.50, which marks 61.8 Fibonacci retracement of the rally from the year's low at 126.22 in January, 2 years peak at 134.85 at the end of February. Only break above 132, 132.10 barriers would provide near-term relief and avert immediate downside risk, and likely to open next strong barriers at 132.50 and more significant high at 133.80, the lower base of end of March, beginning of April 2012. Cable, as said, is in steady short-term uptrend of 158.17, 16th of March low, with the recent action clearing important barriers, first at 159.84, then 160.00, and final today's break above yearly high at 160.61 posted on 2nd of April. So far hitting 160.70. Positive tone dominates on lower time frames. However, RSI on 1 and 4 hour is already in the overbought zone. Yet no any signals of a reversal seen on the lower time frames, 1 and 4 hour, with immediate target on 160.90 high of 14th of November 2011 and 161.00 as round figure resistance, ahead of another array of static resistances at 161.29 high of 8th of November, and the most significant is the 31st of October 2011 peak at 161.64. That will be the next targets in case of further extension of the recent rally. It's important that the pair found good support at 158 zone, and just above it where is the main bull trend line, as well as 200 days moving average. 158 also marks the range of beginning of April floor, and the only break of these significant supports would significantly weaken the structure. Currently the pair is breaking above the recent range that was established at the beginning of February 2012, signaling a possible further extension of the rally from a year's low at 152.33 that was posted on 13th of January 2012. Dollar yen is in the near-term recovery mode of a recent low at 80.28 as a part of the larger correction of 76.00 to 84.17 rally that so far retraced close to 50% of the entire move. Good base was found at 80.28, just ahead of our next target on the downside, 80.09, 50% retracement, and 80.00 low of 28th of February, with the short-term price action bouncing so far to 81.55. Important was a break above initial barriers at 81.00 and 81.18, the high of 13th of April 2012, as the pair extended the gains so far to test the 81.50 so far. The overnight late yesterday's and overnight corrective action was contained at 81.16, so just above our previous strong resistance, now acting as support, and the fresh rally is now underway, attempting through 81.55. Brief loss of momentum this morning was basically increasing fears of a possible creation of the double top pattern, but improvement now seen in the hourly chart studies, as well as quite steady 4 hour once keep the upside in focus, with the 55 days exponential moving average currently at 81.22, holding firmly the downside. Approaching to this is the 20 days moving average currently at 81.12, with the cross above the 55 days one to confirm the near-term bullish structure in play, and open the next barrier at 81.81 ahead of 82 zone and the 82.50. That will be the next targets. However, this is just seen as a corrective phase of the broader broader correction of the 76 to 84.17 rally, descent of 84.17 that so far dipped at 80.28 as I mentioned earlier. I would say the only regain of 83 zone would signal creation of the higher low and open way for a further extension higher and possible retest of the yearly high at 84.17. Until then, the current bounce higher is seen corrective. However, the studies on the daily chart are started pointing slightly higher, and this might be seen as good support for the pair. But as said, 83.00 is our strong barrier zone is needed. We need to see the clearance of regaining clearance of this barrier in order to improve the structure. The dollar Swiss remains under pressure as the recovery attempt from a 90.00 base beginning of April lows has so far run out of steam at 92.50. There was a significant rally after a dip to 1990 when the risk was a scene of reversal towards 90.00 base. However, the fresh track that emerged broke above the initial barrier at 92.21, but gains were short-lived as the rally stalled at 92.50. Further choppy trading followed the sharp decline, and then choppy trading above 91.50 support, where we have the main bull trend line of 90.00, with yesterday's brief attempt higher again being capped just above 92.00. Studies are neutral to negative on the 4-hour chart, while the hourly ones are sort of losing traction. Immediate support at 91.50, where is also the bull trend line support, and now coming under pressure, and the break of this level along with the 91.23 high low of 17th of April would weaken the structure. A break below this recent past, I would say 2 weeks range low at 90.90 would definitely dampen any positive ideas of moving further higher, and likely to refocus 90.00, the base of beginning of April 2012. On the upside, we need to see the regain of 92.08 minimum in order to improve the current structure, and basically holding above this trendline support will still keep hopes of further attempts higher alive. On the daily chart, situation is still in the rather neutral mode at this point, but a narrowing range that was limited by the main bear trend line drawn of a yearly peak at 95.93, still limiting the upside. And basically we need to see the break above these levels, where is also 90 days moving average at 92.20, with clearance of 2 days ago peak at 92.50 required to resume the short-term recovery attempt of 89.36, which marks the yearly low posted on the end of February 2012. A quick look at the gold that is again running out of steam after a unsuccessful upside attempt to retest the previous high at 1683, failed at on approach to this level at 1680, and subsequent steep reversal is now threatening our key short-term supports. The first one is 1628. As the recent low was seen at 1634. 1624 is the main bull trend line, and the low 4th of April at 1612. Negative structure is still dominating on the daily chart, as a series of lower highs keep the downside pressured. However, we need to see the break below 1612 and 1600 as psychological support in order to refocus more significant and actually the key medium-term support and double bottom at 1532, 1522, as the negative structure remains of 1920, 2011 highest record high of gold, with lower tops at 1802 and 1790, still keeping the downside under pressure. As said, immediate support on the downside 1634, 1631, and then the more significant is 1612. A quick look at crude oil maize contract is expiring today, and we're going to do the brief analysis on the last time for the May contract. Set came under renewed pressure of a recent high at 105.04 posted 2 days ago, as the price dropped close to the recent lows at 101.80 zone. 102.18 was seen so far. Larger picture still shows the gold under pressure and in the negative movements of 110.53, recent high posted on the 1st of March 2012, with the current price action being contained on the downside by 90 days moving average, as well as upside still limited by 55 days moving average at 104.18. Above this we have the previous high at 105.45, and the same levels is the bear trend line drawn of 110.53, and basically only break above these levels would avert immediate downside risk and allow for further gains. This is also the low of the base and the floor of the recent range from March. 104.30 is the first barrier, and then 105.50, 105.60 zone, and only break above these levels would be more supportive for the oil's price. On the downside, immediate support 102.18, yesterday's low, and key one on the short term 100.67. that will open our main support and psychological level at $100 per barrel. That was all for today. We're back tomorrow morning at the same time. Until then, wish you a nice day and very successful trading. Good luck.